there's absolutely a case that you can make that over time, and I don't know over how long a period of time, Solana could be $2,000 a token.
GM, good morning. Welcome to the Milk Road Show, a daily crypto show that is glad that Rectember and Nopetober are over and that Moonvember is here to be kinder to all of us. I'm your host, John Gillen. Today we are joined by Cosmo Jiang. Cosmo serves as general partner and portfolio manager at Pantera Capital, where he has been at the highest level of digital asset investment strategies for over 5 years and in traditional finance for over a decade. Previously, he founded and led Nova River, a crypto investment fund, and now serves as Pantera's board observer for the Solana company, a NASDAQ-listed Solana Treasury company and something that everyone is talking about, or if they're not, they will be soon. Today, we're going to discuss everything from digital asset treasury companies to Solana, Solana season, why Sol is getting back into the spotlight, and a ton of other great alpha and insight. Beyond that, Cosmo is very plugged into crypto and everything going on in digital assets. If that sounds good to you, make sure you like and subscribe. Share this episode with someone who is down bad and needs to be up only. Today, our episode is brought to you by Bridge. Power your business with instant stablecoin payments, no friction, no banks, just global finance made simple. Gemini Credit Card. Turn your everyday spending into Bitcoin, stack sats without even thinking about it, and Figure Markets earn solid returns on your cash because sitting idle is not a strategy. And without further ado, welcome to the Milk Road Show. Cosmo, how are you, sir?
Hey, great. How are you, John? Nice. Thanks for having me.
Yeah, well, I'm really happy to have you here. I think that there has been a lot of questions people have had about Solana, about digital asset treasury companies. I know you're really plugged into what's going on, so I'm excited to have you here. I wanted to start with Pantera. I know you all were among the first investors to get to Bitcoin. I think Dan wanted to buy Bitcoin at like $65, which is a great entry. But now Pantera has pivoted, and a lot of your focus is on Solana and the Solana ecosystem. Talk to us a little bit about that pivot. Why Solana? What's got you excited about Sol right now?
So when we think about the arc of history, I think it's helpful to go back to what the original blockchain was. Blockchain technology has been around for decades. It's like not something new, but Bitcoin was the first decentralized blockchain to really take off in a big way. And Bitcoin was great. People loved it. It did something really simple, which is it transfers value back and forth. Simple, great. And when Pantera first started, our first fund in 2013 was a passive Bitcoin fund. And going out and acquiring Bitcoin, we were buying in the mid 60s. So that fund's returned 1,500x since then, which is kind of crazy to think about. And that was great. But fast forward a little bit, people thought we really love that Bitcoin thing. But what if we could do more than just transfer value back and forth? Like, what if we could program more complex smart contracts? What if we could do more interesting applications? And so that's why Ethereum was born, really in response to that. Like, we really love that Bitcoin thing, but why don't we do that except even better? Fast forward a few more years, and you get to 2018, 2019. You started to see, Ethereum was starting to get used. There were applications being built. But as that happened, it started to get slow, right? Ethereum's also not the newest technology, and so it was getting congested. It was expensive to use, and people thought, well, we really love that Ethereum thing, but what if we do that even faster and cheaper and better? And so that's why Solana and a bunch of other L1s really born in the wake of that, and Solana's been the one to really scale and take off. And as I see it today, if we expect to go from tens of millions of users to billions over time, which I'm very confident that blockchain will do, then we need a large scale, scalable, fast, cheap blockchain. And that's what Solana is. When I think about, why now, it's like we've already experienced as an investment firm 1,500x returns on Bitcoin. We're not going to get that again on Bitcoin, as much as we are like really excited about it. But something like Solana that's much earlier in its growth stage, you can still see a tremendous forward return on it. And so that's why we're really leaned in.
1,500x returns is just fun to even say. So yeah, I thought that was a great place to start with. And, I think a lot of people who are, digital asset native investors kind of get this idea of tribalism of like us versus them. But, like you said, there's a huge market here and we can grow the pie for everybody. There's room for Ethereum, for Solana, for a lot of other digital assets. And there's room for Bitcoin too, obviously. So yeah, I think that's a helpful mindset that there's just a lot of room for growth there. So Pantera is not just, buying and holding Solana. There's a lot of different things that you all are doing in the Solana ecosystem, building investments, innovations. Could you just give us an overview? I tried to get a my arms around this when I was preparing for this interview. And there's like so many different things you guys are involved in. Maybe just give me from your perspective, what's an overview of what Pantera is doing in the Sol ecosystem right now?
So we're, Pantera's core is really about early stage investing. When we started our first fund, it was a passive Bitcoin fund, but it became really, it became really natural to then want to support everything around Bitcoin. And so that's where we launched our first venture fund in 2013. Fast forward today, we manage more than $5 billion of assets, but the vast majority of them are in venture strategies. And so our venture fund is really focused on trying to empower the blockchain entrepreneurs that are going to create the applications that really take off and enable a blockchain-enabled future. Within that, we're spending a lot of time with, our number one goal is just to find the best entrepreneurs with the best ideas. And in that sense, we're a little bit chain agnostic, right? Wherever they choose to build is probably, we trust them to make the right decision. And what we're seeing increasingly is more and more entrepreneurs are choosing to build on Solana. There's this developer report that shows, the number of new developers that are coming into the space. And over the last few years, the vast majority of net new developers are coming into Solana, and we're seeing that reflected in our venture pipeline as well. And so we invest in a lot of different a lot of applications across the Solana ecosystem on the venture side. And then in the rest of our business, which is our, liquid investing portfolio, which is also directional, long-term oriented, trying to find outstanding protocols, businesses, and entrepreneurs, we're also investing pretty heavily in Solana ecosystem tokens, Solana itself, and everything else that's enabling Solana.
Gotcha. Yeah, and there's a lot more that you can drill down on in all of those different things. But I think that the thing I wanted to start with or focus on, I think, for this conversation is the Solana company. Pantera closed a more than $500 million PIPE offering to launch a new digital asset treasury company that is now simply known as the Solana company. And you are the board advisor observer for Pantera with the Solana company. Tell our audience a little bit about this digital asset treasury company. How did this deal come about, and what's the nature of your involvement here, and what's got you excited about this?
So at Pantera, we've been fortunate to be really the firm that effectively started this whole boom in digital asset treasuries this year. I mean, if you go back to the beginning, obviously Michael Saylor is the OG, and he started by buying Bitcoin for MicroStrategy back in 2020. That was extremely revolutionary and disruptive at the time. And then Metaplanet in Japan decided to be the second one in the world to really try to execute the same strategy in Japan. They started in 2024. And as I observed that, at first, it took me a long time to grapple with why the digital asset treasury business model made sense. But as I started to realize that it really comes down to, it is possible for DATs to increase their tokens per share faster than just owning spot. So it is possible over time, if you have a very well executing DAT team, to actually own more, if you're invested in a Bitcoin DAT, to own more Bitcoin by buying the DAT, even at a premium relative to buying spot, because they can grow that Bitcoin per share. So I thought that was really, that insight led us to start to try to find opportunities that are similar. And sort of coincidentally at a similar time, in late March or early April of this year, we were approached by a team about them wanting to start at the time I was calling MicroStrategy copycats for Solana. And I just thought, wow, like we just did all this work researching why MicroStrategy made sense and why we can get our heads around it. As a firm, we're really excited about Solana and something we want to lean into. And then, by the way, Solana actually makes a lot more sense for a digital asset treasury than Bitcoin because it has organic yield. And so that's what the marriage of all those events and the timing allowed us to, underwrite and anchor an investment in DFDV, DeFi Dev Corp, and really be the first venture firm in the world to really lean in and say, hey, we think this is possible and let's try to do it. At the time, I thought, wow, this is incredible moonshot, like never gonna see this again. I thought it'd be once in a lifetime thing. Like we're gonna take one bet and that'll be it. Next week, Cantor, the bank, called me up and said, hey, we saw what you did with DFDV, and we've actually been thinking about doing something similar with SoftBank and Tether, except in Bitcoin. And I thought, well, we did one, and I think Bitcoin still makes sense for there to be second. So why don't we try doing this? We stepped in, and we're the largest investor in that as well. But I was like, okay, at this point, it's definitely two and done. Like, there's not going to be more of these. But fast forward to today, we've now taken over 200 pitches. We've invested over $500 million of capital, and really because we were the first ones in, we've continued to be, and I'm flattered and humbled for this to be the case, to be the first call or the first few calls for any team, any lawyer, any banker thinking about starting something. And so we've really been helpful, and we've been fortunate to be in a position to help start a lot of the industry leading digital asset treasuries, whether that's stuff like Bitmine Immersion or Orbs or really any of the leading ones. We've really been in there day one, helping them get off the ground. Obviously, all the credit goes to the entrepreneurs that actually take it and bring it to life. But hopefully, our capital and our overarching advice has been helpful. And so we did all this work, and we've been deploying pretty meaningfully into high performing teams. And especially when we saw the incredible success of Bitmine Immersion and what it did for ETH, we started to think about, well, what's the remaining white space? And it actually all circled back to our first love, which is Solana. The first thing that started all this was starting a MicroStrategy copycat for Solana. DFDV has done fantastic for ourselves and our investors, but it's still like not a really massive scale, right? And so we realized that there was a real opportunity to create a large scale Solana DAT, take everything that we've learned by being the guys that really helped start this trend, all the learnings that we've had, all the mistakes we've made, all the things that we've seen that have worked, package that and put our best foot forward and like sort of bear the responsibility. We felt like we had the responsibility to take all that learning, our love for Solana, to create an industry leading Solana DAT. And so that's why we came to the decision to launch one. It's because we built all this experience. We helped in many ways create this boom, and we really want Solana to succeed.
Stablecoins are the biggest use case in crypto right now, but let's be real, using them on chain is still way too complex. That's exactly the problem Bridge is solving. Recently acquired by Stripe, yep, that's Stripe, Bridge helps businesses send, store, accept, and launch stablecoins instantly. Explore the future of global financial infrastructure at milkroad.com/bridge. Did you know you can earn Bitcoin without ever buying it? That's where the Gemini Credit Card comes in. Here's how it works. Earn up to 4% back in Bitcoin on gas, transit, and rideshare, 3% on dining, 2% on groceries, and 1% on everything else. Use it just like any other credit card. And you're building a crypto portfolio at the same time. The best part, the Gemini Credit Card has no annual fee and works anywhere MasterCard is accepted. When you're approved and spend $3,000 in the first 90 days, you'll get a $200 Bitcoin bonus. Spend as usual, earn Bitcoin instead at milkroad.com/Gemini.
Fantastic story. I really appreciate the the context, the insights on that. I have a lot of questions to ask about this, but I think what you said about Pantera really leading a lot of this digital asset treasury boom and this narrative that we've seen. A lot of people have heard of this narrative and seen it, move markets in a lot of ways, but a lot of people are also saying that it might be sort of played out. I'm curious what your thoughts are on this. Why are you still excited about the digital asset treasury space, and what's the unique opportunity that you still see to be captured there?
So we rewind back to April, which is only a short 7 months ago. At the time, I thought, wow, as I started to see this space take off, well, first of all, I stopped calling them MicroStrategy copycats, and I came up with the moniker Digital Asset Treasury. And then Digital Asset Treasury ended up being too much of a mouthful, so I started calling them DATs, which we've seen has grabbed hold. And so these DATs, I was like, well, let's bring out the whiteboard and map out where the white space really is, right? And I thought, well, I could see there being 2 or 3 really large Bitcoin, ETH, and Solana ones. There are a few other tokens that I think this could be really compelling for, and we sort of mapped it all out. But it became clear that at the start, what we just saw was like the genesis of a whole new industry of companies, right? And for any given industry, that only happens once, right? The genesis only happens once. And it's very natural when there's a large white space that many entrepreneurs and many startups will try to tackle it, right? There's not just one company that tries to do something, it's a lot. And our goal is to try to find and filter out for who we think might be the best few in each of those categories. But it's not like we know for sure who is going to be the best. We're taking a few bets across each of those spaces. And as we fast forward to today, 7 months later, it does look like a lot of that white space has been taken, right? It's no surprise a lot of entrepreneurs have entered this space, but now now as I tick off that original whiteboard, like all that white space has been taken, and we're now at the end of what I would call the genesis phase, or the creation of all these new DATs. That's not to say there may not be more new DATs that come out in the future, but it's going to be a lot harder. The moats, the barriers to entry are a lot higher, and it just seems like less likely. And so I think we're done with this genesis phase. And I think that's what got a lot of people excited, is like the excitement of starting a lot of new companies going forward. And so that's perhaps why a lot of people think like the DAT boom is over, because we're probably not going to see many more new DATs. But as someone who's been in the public markets for most of my career, the vast majority of wealth, like 99.99% of a company's growth or the wealth in the world, is created in the public markets, right? It's not at the startup phase. It's everything after the startup phase. And so I'm really excited for this industry to become a quote unquote real mature industry now, which is entering this consolidation and execution phase where truly the winners and losers will be separated. There will likely be 2, maybe 3 very large DATs across Bitcoin, ETH, and Sol that really consolidate, that are the ones that can show they can execute in a high caliber way and break away. And then everyone else, which is, there are the vast majority of startups in the world aren't really interesting outcomes. The vast majority of DATs were never supposed to be interesting outcomes. That should have always been the base case, and they won't be. And that's fine, right? They tried. A lot of people try. A lot of people don't make it. But the ones that do will go on to be incredible outcomes, and they will consolidate and rationalize the space.
Yeah, really appreciate you taking that time to lay all that out for us. I really think that the land grab, as you said, the white space is over, and now comes the work of building. So let's talk about what you're building. I want to zoom in a little bit on the Solana company. They delivered a really impressive performance report for their first full month in operation as a Solana Treasury company. 2.3 million SOL. Under Treasury there. But what really caught my attention about this report was there's a 7.03 staking return, which outperformed the top 10 validators in the Solana ecosystem, which I thought was really impressive. And I wanted to kind of get your thoughts on this. What were some of your key takeaways from the first month of operation? How is the Solana company able to outperform all these top validators in the Solana ecosystem? I don't know what you can or can't share about that, but that's what stood out to me. I'd love to hear your thoughts on how that outperformance is being achieved.
Well, Pantera is the asset manager for HSTT Solana company, and we're really proud of what we can provide as the asset manager. Pantera has been in the Solana ecosystem for a long time, so we have really deep relationships with validators across the ecosystem. We're on top of where all the developments are coming from, and because we are at scale, and because some people believe that we do provide strategic advice and strategic help, we get to have very, very close relationships and very advantageous economic relationships with these validators. And so in many cases, without running our own validator, we effectively get all the benefit of that and all the excess economics that come from that. And we're doing our best, and we're doing our job, which is passing along all those economic benefits to HSDT Solana company. And so we're really happy that we're partnering with some of the best validators in the ecosystem. We're diversifying a little bit amongst them so that we have resilience, and they're all delivering incredible industry leading returns, and that's translating to the stat that you said. We're outperforming the top 10 largest validators on a stake weighted basis by over 30 basis points. That's like almost 5% above what everyone else is getting, and so we're pretty happy about that, and we hope that will continue.
Yeah, well, I thought that was a really surprising way to start, or well, not surprising, but a very strong way to start with the first month's performance report coming in so strong like that. Another question I had coming out of this is to ask, how much dry powder do you all have, or does the Solana company have? Because I think part of what was interesting about the way the funding was done for this was there was the PIPE offering, but then there's also warrants that are part of this funding strategy. Talk to me a little bit about what that exactly means, and what dry powder is still able to be accessed for the Solana company here.
Yeah, so we've announced that at the beginning of the transaction we raised a $500 million PIPE, or I think it was 508, but like roughly $500 million PIPE, and then it also came with stapled warrants. What these stapled warrants are if the stock increases 50% from the PIPE price, then investors can choose to exercise those warrants. In order to exercise, they need to give us cash or give HSDT cash to do that. And in doing so, and there's about $750 million there. And so if Solana, it's a really incentive aligned structure that we created, and we're really happy to pioneer, which is that if HSDT does well, then our investors will share in those rewards by having additional upside. But as they share in those rewards, they will also give us more money so that we can keep doing what we're doing well. And so it's a very win-win structure that we think we created. That initial $508 million of capital, we've announced that we've acquired 2.3 million SOL tokens, and we still have more than $15 million of cash on the balance sheet. And so that's where our current position is. We're pretty happy about that, given where Solana. Clearly, we're not in the most bullish environment right now. When we launched, Solana was at 240, but we're pretty happy that we're not just out in the market blindly buying. We also take we also have a very market aware approach, and so our average cost basis on Solana is nearly 10% below when Solana launched, which we think is really great. And that's all accrued to the benefit of our shareholders. And so, we're continuing to execute on the capital plan in addition to these stapled warrants, which are future dry powder if we succeed at our job. We are also continuing to execute against all the capital options we have available, such as the ATM that we announced when we announced our transaction, as well as looking at potential institutional offerings like additional pipes or structured warrants or convertible debt.
Gotcha. So as this grows, as you, like you said, do your job, get returns for your investors, there's a lot of dry powder that you have on the sideline and even more that you could potentially tap into to keep growing here. Something you've spoken about.
Yeah, I think that's right. Just to nail that in, it's like if we succeed at our job, that original 500 million that we raised could be $1.25 billion over time. And we're excited to execute well and earn the right to have all that capital deployed towards Solana.
Right. Yeah. And so this is kind of what I wanted to ask a little bit more about, right? Is those strategies, methodologies to differentiate, to get that performance. You spoke a little bit about some of those relationships that you have through Pantera and with the Solana ecosystem. But a goal that I've seen you talk about, or a metric you've cited, is Solana-per-share, and increasing the Solana-per-share for investors in the Sol company or the Solana company. Talk to me about those methodologies, strategies. If there's any more you can elaborate on how you're going to achieve that goal of like increasing that Solana per share, or not you, but the Solana company is going to increase the Solana per share.
So you said it exactly right, which is the purpose of a DAT is to maximize the tokens per share accumulation. All right, so that today, if you own 1 Bitcoin per share, or in our case, it's not the exact number, but for example, if you own 1 Solana per share by owning GSDT, we hope by executing against our plan, you will own 1.5, 2, 3, 4 Solana per share in the future. That's the goal, and that's why DATs are potentially better, can be better investments than just buying spot, where you're not stuck with, but you only have 1 Solana per share forever, right? That's the nature of spot. There are many tools that a DAT has that it can execute to really do that. The first is, and the most important, is really advocacy. The best thing that DATs can do is really promote and talk about why Solana is an amazing investment to a new set of investors. We spend most of our time trying to talk to Main Street retail or mainstream financial media, because all those people still don't know what Solana is. And if we just get, as much as we love your audience, we love our peers in the crypto native world, if we talk about Solana to you guys, it's like, most people know what Solana is. And so it's not that additive, but wow, it is so additive if we can go out on CNBC or Bloomberg or Wall Street Journal and all these places and talk about why Solana is so awesome. And if we do, that brings in a lot of new buyers, right? And that brings a lot of new capital, a lot of new buyers, a lot of excitement. And if we do that, then we can raise capital via our ATM in an accretive fashion. That's been the primary driver of MicroStrategy success to date. And that's something that we hope to execute on. The next is really executing on other types of capital raises, such as selling convertible debt or selling warrants, which are effectively like selling volatility on your stock, that we think can be very effective, as well as other types of capital raises to really take all that excitement that's generated by advocacy and marketing and translate that into additional capital to buy more Solana. And then the last piece is really about our management of the Solana Treasury itself. Like I mentioned, we're really proud at Pantera that we've been really successful investors in the digital assets ecosystem for the last decade plus, as the first institutional asset manager doing blockchain in a dedicated way. And so over that time, we've built expertise. We have we've developed over time some market sense and some expertise in managing our Solana balance sheet. And so as a result, we're able to buy Solana in a smarter way than just market buying in the market. We're able to, and that's resulted in meaningful returns for HSDT shareholders so far. We're able to stake our Solana in an efficient way. That's also resulted in meaningful outperformance for HSDT shareholders so far. And then we're also able to look at what if there are even more interesting, innovative ways to deploy our Solana, such as in DeFi, such as in Solana-denominated venture investments. And so we're exploring all those options, hopefully all of them adding together and folding into maximizing Solana per share growth.
I want to kind of touch more on this this retail versus institutional narrative storytelling and pitching concept, but I want to ask your thoughts on something. Recently, Bitwise was able to get approval from the SEC using their new general listing guidelines for an ETF with staking enabled for Solana. And I'm curious your thoughts on this, because as we've seen, like you described this proliferation of digital asset treasury companies, we're also now seeing coming more to the market ETPs, ETFs for digital assets. Do you see these products as being competitors with digital asset treasury companies, or are they like supportive of the ecosystem? What are your thoughts on this growing landscape? Because now there's, if I want to get exposure to Solana, I can stake it myself in my Phantom wallet. I could buy an ETP with staking. I could look at a treasury company. Like, what are your thoughts on how this expansion of products either like competes or cooperates with the ecosystem overall?
So I think DATs are actually really, really synergistic with the rest of the ecosystem. And that's part of the reason why I'm so excited about them. When you think about how protocol ecosystems have grown up historically, there's usually a labs entity. That's the software developers that have created that helped develop the original protocol, like Solana Labs in this case. And then there oftentimes is a foundation entity whose goal is to continue promoting the ecosystem, healthy ecosystem growth. Now, both the labs and the foundation historically because of regulation have been limited in how they can talk about Solana, right? If you're the labs entity, oftentimes your lawyers tell you may not talk about Solana ever. You may not talk about the token ever. Otherwise, you're going to get sued and go to jail, which hopefully will change in the future. But that's sort of the crazy draconian system that we live in today. So labs entities never talk about the token. The foundation has to be credibly neutral, right? They're allowed to talk about the token, but they have to do so in a neutral, balanced way. They can't make specific bets across the ecosystem. And in particular, when it comes to governance, they definitely can't raise their hand and say, what we do, otherwise they come across as biased. And so the foundation is limited and hobbled in many ways. Well, a DAT is a for-profit equity company that's blatantly, its only job is to maximize the value of the token. And so if that is the case, they can be extremely aggressive about talking about why the token is a great investment. They can do all these things that the labs entity is afraid to do. They can be very opinionated about how they think the ecosystem is supposed to develop. So they can do things that foundation can't do. And so I sort of describe a DAT as like the third leg of the stool in really what it takes to have a healthy protocol ecosystem. And so we're really excited to see how that plays out, especially as these DATs grow in size over time.
Gotcha. Yeah, no, I think that's a really interesting distinction between what each of these players in the ecosystem can do and how they are supportive of each other. And I think, like I said earlier, it seems like these things are in competition, but really the rising tide lifts all boats. And I think it's just constructive for the whole space. I want to kind of come back and get your thoughts on something you touched on before, which is like this growing gulf, I think that a lot of people are becoming aware of between retail investor sentiment and institutional, or Wall Street, let's call it, sentiment. Because right now it feels like retail is very bearish. They're kind of wrecked. And Wall Street has never been more bullish, never been more eager to adopt these assets and these products. What are your thoughts on this gulf? And what do you think needs to happen to reignite retail interest in the digital asset space?
So I think it's sort of funny. We're going through this weird time period right now where we're seeing the transition from exactly what you said, which is the historical digital asset owners, which has been largely retail in the past, or the OG cypherpunk OGs, into the new base of buyers who are institutions. Now, I enter this space. I'll say this candidly. I'm not a crypto native by any means. I don't think of myself as a crypto native. I'm really a tech investor. And so in many ways, I'm almost like a wolf in sheep's clothing. Like, I think it's so clear to me that digital assets are going to be so disruptive to so many areas of technology in the future. But in order to get there, we need to go from tens of millions of users to billions over time. And we need to grow the capital base from what is 4 trillion today, or really 2 trillion x Bitcoin, to tens of trillions over time. And that incremental $10 trillion of capital is not coming from retail, right? It can only come from institutions. So the only logical way forward, the only healthy way to grow forward, is by attracting institutional capital. And so we're starting to see that turnover right now. I totally get why a lot of people feel like that's disappointing, that's causing a lot of people to say like, hey, this isn't what I signed up for and I want to sell. And so we're seeing a little bit of that play out, as a lot of the OGs, quote unquote, are saying like, this is no longer my crypto, or like, we've reached success, so now it's time to rebalance. I think that's very natural as we go through this turnover of investors, and you see this across all sorts of assets and investments over time. This is very natural. This is a natural maturation point. As we get past this consolidation, you're going to see that the overwhelming flows of institutional investors coming in will start to buoy things. And when that happens, naturally, existing investors, retail investors should all get excited again, and will all be excited again as things start trending in the right direction.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Yeah, I think I agree with that too. So I would like to hear your thoughts on this. As somebody who's been, like I said, at the highest level of some of these conversations, digital asset investments and just those opportunities, what is the tenor of those conversations in terms of like the differences between how institutions are thinking about Bitcoin versus Ethereum versus Solana? The chief investment officer of Bitwise, Matt Hogan, wrote a memo recently calling for Solana season and saying that he says that like the whole space is constructive, just like you said, but he's particularly bullish on Solana. And I'm curious if there's any distinction in your mind between how institutions are thinking about these different, call them major assets in the digital asset space, and just like what you can tell us about how they're approaching these things differently, or how they're thinking about them.
So a lot of my time at Pantera spent talking to our largest limited partners, right? So it's guys like, it's endowments, it's pension funds, it's sovereign wealth funds. And it's pretty clear that in most of these conversations, the vast majority of people are at zero. And so their first step into digital assets is often Bitcoin. And that's very natural, right? So, 75% of the conversations, especially with people that are on day zero, are talking about Bitcoin. When I think about digital assets, though, I do think of it as there's Bitcoin, and then there's blockchain technology, which is everything else, right? And everyone does. I think it definitely Bitcoin can survive, thrive, succeed without blockchain technology succeeding or thriving. And similarly, like blockchain technology, whether it succeeds is totally independent of whether Bitcoin succeeds. And so in that context, it definitely I often advise these institutions, hey, if you believe in Bitcoin and digital gold, and these are all the reasons I believe in, you should buy some. But by the way, it would be really, you wouldn't be doing your fiduciary duty if you don't also consider blockchain technology, which is everything else, which is Ethereum, Solana, all these applications. Like that is where, if you are truly a growth tech investor and you want to invest in technology, that's what you're supposed to be focused on. Digital gold is great. Digital gold, you do you, but blockchain technology, that's what we're super psyched about, and where institutions really start to think about. And so everyone starts with digital gold and Bitcoin, and then they start to open their eyes to how amazing blockchain technology is. And within that, they obviously start with, people go in different directions. If it's liquid, they look at active funds like Pantera, which is invested across all these tokens like Solana, Ethereum, and others. Or they go venture, right? And Pantera has venture funds that also invest in early stage privates. And we're actually just launching our 5th venture fund right now that we're really excited about, to keep investing in all these amazing blockchain applications.
Awesome. Yeah, no, and I think that that's a great shift that's happened, right? It used to be like it was toxic to even, talk about or think about anything in the digital asset space. And now it's like, well, even if you're not allocating yet, you still have to start thinking about this, and just being responsible means educating yourself and starting to come to these digital assets. So that's, it's a process it's playing out, but the tenor of those conversations has definitely shifted. So I'm excited to see that. So I want to get your thoughts on something here. What is something, as somebody who's in a lot of these meetings, in a lot of these high level conversations, retail investors don't often get access to those discussions, don't often see what's happening behind these doors. What's something that retail investors are either overlooking or misunderstanding about the digital asset space right now? Because like I said, there's this big gulf in sentiment, and I think part of that is a difference in information or education. So like, what do you think people are missing, overlooking, or just not understanding right now?
I think I think there's a couple things. There are a couple of big trends that I'd say I call out. One is, and these go along what we just talked about, which is the biggest trend this year has been the embrace of digital assets by traditional equity investors. Right? I mean, you're seeing that in the performance of Coinbase and Robinhood, wildly outperforming the S&P. You're seeing that in the incredible performance of new IPOs like Circle, Figure, both Pantera investments, or others like Bullish, Gemini. You're seeing that in the incredible amount of capital and excitement that has been generated from DATs. And so all those are really indicative of just how much demand there is from equity market investors for digital asset exposure. I think one of the biggest catalysts for that isn't talked about enough was the addition of Coinbase to the S&P 500. When you think about, like in a lot of these institutional conversations, I'd be meeting with XYZ person from XYZ endowment this time last year, and they'd say, wow, like, there's always one or two crypto evangelists, you'd say, or crypto enthusiasts at every large firm. And they would say, wow, we really like what you guys are doing. We'd love to invest in Pantera. I check in with them a couple months later, and they're like, I went to IC and I pitched a private credit fund. Sorry, I just couldn't bring up crypto because it'd be like too risky for my job. And I was like, okay, fine. Like, I get it. Like, all right, I think it's disappointing, but these guys are worried about career risk and bringing up something that they thought was risky. This year, that conversation has totally shifted, right? Instead of saying it's risky, it's now, if Coinbase is in the S&P 500, and now every allocator has to go into work every day benchmarking against the S&P 500, and it has crypto in it now. So every day you have to choose, if you're a professional investor, whether you want to be overweight, underweight, or equal weight crypto. You can no longer ignore it, because every day you're making an active choice. And so now it's no longer your fiduciary duty if you're not bringing up crypto. Whereas in the past, it felt like it was risky to. Today, it's like your dereliction of responsibility if you don't. And so that's been really powerful to see, and that's why we're seeing so much excitement in this space.
Awesome. Yeah. Again, helpful insights on all of that. I think another thing that, the most obvious thing that's causing this frustration is the price performance, right? Bitcoin right now is fighting for its life at support around 100K. And a lot of people are wondering, is the top in, is this over? Or is this just, like you touched on this a little bit before, but like some OGs rotating out their investments? What are your thoughts on where we are in the market? This lag in performance we've seen from Bitcoin, but from the broader digital asset space overall. Are you getting frustrated? Or are you rage quitting? Or do you think that this is just taking a breath before we go to new highs in this bull run?
I very much sit in camp that I think markets are just consolidating. This is natural, and we're the forward outlook is so good that I'm very positive. And let me talk about why. Like the reality is that if you go across the arc of history over the last few years, to get to this point, 2021 was this time of incredible excitement, DeFi summer, all these things were popped out. And in 2022, after a period of excitement, that does lead to speculative overexcitement and overexuberance. And 2022 was the digestion or the bursting of that speculative bubble, right? We saw a lot of people lose money. We saw a lot of things pull back, not just in crypto, all asset classes, but crypto too. As we moved to 2023, it started to become the digestion of all that damage, right? The users felt like they were lied to or cheated, in many cases actually cheated, and so they started to leave the industry. Capital providers that lost money had to get stopped out and left the industry, and then regulators who clearly had under-policed the industry felt like they had to over-police it, overreacted. As we turned the page to 2024, some of that started to get digested, and 2025 is all about then all those headwinds now becoming tailwinds. right? On the user front, we're starting to see a bunch of users come back to the ecosystem, whether that's to use things like pump.fun or social applications or just trading applications like Hype. Users are coming back in a very big way. But on the capital side, the ETFs have been incredible, and you're just seeing all this demand from equity markets for digital asset exposure. So you're seeing a lot of capital flows. And then on the regulatory front, man, it's been a total 180 shift in the U.S. government and the establishment's approach towards crypto in a very good way. I think that's very durable and will continue for the long term. And so this is there are so many headwinds that have held back the industry that are now becoming multi-year durable tailwinds. And so that's why I think actually the risk reward for investing in crypto today is better than it has been in many years. Like you mentioned, prices are down somewhat from the highs. A lot of people are feeling pretty bad. But man, if prices are down, but fundamentals are way better, usage is up, users are up, applications are better, and we have all these multi-year tailwinds now at our back, it just feels like, the risk reward for investing in digital assets has never been better. And that's why we're so excited to deploy out of our new venture fund, Fund 5, as well as our actively managed fund, our hedge fund, and really try to capture all these opportunities ahead. And hopefully everyone listening can too.
I really enjoyed listening to that. It made me want to stand up and salute. So thank you for the bullish pep talk there. I want to end with a price prediction out of you. And I think a lot of people ask for Bitcoin price predictions. I'm much more interested in what your targets are for Solana. And I don't necessarily want to put an end of this year or next year, because we don't know what's going on with this bull run, or how long it'll extend, or what's going to happen. But right now we're sitting at about $155, $156 on Solana. Where are you looking for this to go? What are your thoughts on this? Do you have time frames, price ranges? What are you thinking in terms of a price performance from Solana?
Yeah, absolutely. It's a great question. And, going back to what HSDT, Solana company, we view our role as really advocating and being almost the investor relations arm for Solana Foundation, right? And we actually recently released a investor presentation that talks about our thesis on Solana and why we're so excited about it. And in that, we actually provide a mapping of how traditional investors think about it, like an income statement for Solana, and then what that could mean. We talk about how Solana, if it does succeed in penetrating a lot of different use cases, if it succeeds in being a large part of our economy and capturing value from all that, there's absolutely a case that you can make that over time, and I don't know for how long a period of time, Solana could be $2,000 a token. I think in our presentation, which you can find online, we say, a $2 trillion market cap for Solana is not out of the question. And so we're really excited to see that. That's more than 1,500, or that's more than 15x growth from here. And hopefully that if everything succeeds in what we think that Solana can succeed in, that's a reasonable outcome to expect.
So what I'm hearing you saying in all of this is that the institutions are here. They have trillions of dollars of capital and a lot of new products that they're going to be bringing into this ecosystem and building here. And that now is a great opportunity to be patient, to be educated, and to sort of lean into digital assets as opposed to rage quitting. I think it's a great message. So I really appreciate you kind of walking us through what you're seeing and giving us all this insight and context. Because like I said, retail investors, I think, are very enthusiastic and passionate, but they don't often get this sort of inside access and thoughts and perspective. So really appreciate that, Cosmo. I want to just ask, going into the end of this year here, what are you giving most of your time and attention to? Because we've talked a lot about Solana, but Pantera does so many different things, and you have a lot going on outside of the Solana company. What are you? Is it meetings with institutions? Is it other things? What are you putting most of your energy into right now, going into the end of the year?
Well, we're always trying to find amazing entrepreneurs to invest in. And so, my role leading investment strategy here is to find really interesting things to invest in, whether across the Solana ecosystem and others. It's to, my role as a board director at Solana company, HSDT, is to make sure that we're executing against the plan to maximize token value per share. And then, my goal, and then my other role is really advocating for the digital asset space at large with institutional investors. And so the more that I can do each of those three things, the more I'm excited about, the more that I feel like I'm accomplishing something on the behalf of the space.
I think you've accomplished a lot, and I wish you the best of luck with all those efforts. Where can we send people to find more of you and your work online?
Yeah, you can follow me on Twitter at Cosmo_Jiang, and the Twitter handle's right there. You can see some of my writing in Pantera's blockchain letter. We publish a monthly blockchain letter that people subscribe to. You can go to panteracapital.com and find all the information that we publish there.
Awesome, man. Well, this was really fun. I learned a lot. I hope you enjoyed being here. I really enjoyed this conversation a lot. This is just the hopium I needed right now. So thanks so much for being on the Milk Road Show. I hope we can have you back again soon.
Yeah, awesome. Thanks so much for having me, John.
Absolutely. And thank you all for joining us. I hope you all learned a lot. So until next time, stay safe, stay bullish, stay educated, and we will see you all on the next episode of The Milk Road Show. Bye, everyone. Thanks for being here.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.